Hello stock gurus and welcome to another episode. Today the market is, ouch, pretty red across the board on the tech sector. Look at this, BNGO down 20% yesterday, MVAS pretty, whoa, look at this across the board. Okay, so we have a big red tech sector. And then we also have some of Palantir, that was good. I bought some yesterday. Palantir holding that support and going up 4%. Here, it was very strong support here. But the tech sector is selling off like crazy. That was good on Palantir. Google also holding up, Facebook holding up. So not the entire tech sector, just the overbought ones. Interesting. It's like most of the growth stocks. So the money seems to be moving from the growth stocks to companies like Boeing, etc. So we're going to see now let's keep monitoring what's happening to the NASDAQ. The NASDAQ is the biggest tech companies. We use the NASDAQ composite, it's IXIC. So this is the NASDAQ composite. So this is what we've been following. If you've been watching previous videos, is the tech market going to crash, etc. This is the NASDAQ. So this is the NASDAQ composite index over time. This is when it peaked here on February, hitting that, look at that, it exactly hit that trend line, 16th of February. And then it's come down. Now, normally what was happening is since the COVID pandemic, this is the NASDAQ since the COVID pandemic. So can you guess where? Here was the COVID pandemic. And then since then, March, it's just been climbing in this big trend kind of channel. It climbed up a lot, right? Look at that. Okay, so before COVID pandemic, so this is 2020 February. The NASDAQ was sitting at 9,693. 10,000. Then it fell down all the way to 6,800 even. So it nearly halved the entire NASDAQ. And since then, it's gone from 7,200 to nearly 14,000. The NASDAQ has doubled since COVID. It's doubled. It's the entire NASDAQ, all the biggest tech companies, the entire NASDAQ has doubled since the COVID pandemic. After it dropped from 10,000 down to 6,500, now it's doubled. And now it's correcting. And it did break this main trend line that we were tracking. I made a video on the other day that it was very important the NASDAQ held that blue line. And it didn't, it broke. So it's more than likely coming back to this target, 12,669. And I think that will pan out at the same time. I think they're going to push the stimulus. I mean, this is what we're seeing on the technicals. But right now, don't forget, there is a $1.9 trillion stimulus that's being planned right now to be released. And the Senate's voting on it. If the Senate does not vote on it, I think it will be a rapid pullback, especially on the tech sector, but the entire market to this 10,600 if they vote no on the stimulus deal, which is actually, it would be a bit brutal. It's almost a 25% sell-off in the market. And it did break this trend line. It was very important. I made that video yesterday in the morning saying how important this trend line, this candle was to close back up into this trend line. With it closing underneath this trend line, but this is why they're pushing, like it just happens that the stimulus is coming, like being voted on at the same time, because this is very important. They really need a stimulus right now to keep boosting this up. This market, this entire market has been propped up. This is manufactured market. Here was COVID. This is when the whole COVID pullback happened, right? And then the Fed started buying equities and pumping the markets with trillions of dollars, creating trillions of dollars. And then it's had this rapid rise. So this entire thing is manufactured currently. You have to remember this. So they're either going to let it crash back down to this main trend line. The real actual trend line is down here if we go by the COVID pandemic. But they could let it come down to 10,000. But why would they? That's a possibility. But then they're erasing all the work they did to prop up this market from July onwards. The whole point of this was they keep propping up the market. But a healthy pullback is kind of normal, even to there. And on the grand scheme of things, everyone, this is the great this is the great trick of this entire thing. This is what you always need to keep in mind and what I teach in the course. And if you have not taken the course, you're just really you need to really take the course to understand everything we're doing here, because in the long run, you're buying amazing companies for the long term. These little corrections, these market dips, this was the dot-com bubble. And this is the NASDAQ. So these are the tech companies. And this is the dot-com bubble, where it went from 6,000 down to 2,000. Then this was GFC, Global Financial Crisis, in 2009. It almost 50% drop actually, from 2,600 to 1,200. 50% drop. And now we're here. Now we're sitting at 12,700. So the overall trend is massively trending up. And the US stock market and the tech sector always goes up. Look at that. That's what you got to always keep in mind. And I really believe this is undervalued, actually, even with all, just because so much money is being printed right now. But okay, it does look like a big pullback is happening, but it needed to also. If you've taken the course, you'll know about these conditions. But these indicators, which I teach you how to do, everything you're seeing here, you learn how to do in the Stock Guru Master Course. In the description, the pin comment, www.stockguru.us. So squeeze mob, green, stochastic overbought, RSI overbought, and they're turning to come down. And I'll also show you the chat room later, because I noticed there's just general panics in the market, but it's very interesting. We have a Stock Guru chat room, and in the chat room, everyone's just talking about, it's very nice chats. Let's check them out later. I want to show you the different people. And I also want to show you a message from Pan, one of the multimillionaires in the chat room. He was telling people for the last month about this crash. He wrote a really big kind of theory on this. And I'll show you his theory before he predicted this market correction. The chat room's amazing. I highly recommend you join chat.stockguru.us. There's 170 of us in there. It's $49 a month. There's 16 millionaires that we know of, 6 multimillionaires, and we're talking pretty much 24/7 using Slack app. So you have it on your phone. It's like a chat room. Very nice, sharing images and charts and ideas. So on the long term, stochastic RSI turning to head down and squeeze mob green. So it is overbought. So, okay, above the dotted lines, we don't really want to be buying a lot. We want to be buying it closer to the bottom, so it's where it's undervalued. The only time it really came down, though, the tech sector, was during COVID, the March panic. And also here in 2019 Christmas era, there was a bit of a sell-off, if you guys remember that little mini crash we had. So, okay, on the long-term side of things, it does look like it needs to come down just to correct the stochastic and RSI. And its actual main trend line is here, this $10,000 line. If that and that's the upper trend, that's the upper line of the trend line, not the actual bottom one, not the main one. This is the main one. The upper end of it, because we kind of went parabolic after that COVID pandemic, because they started propping up the markets, because they wanted everyone to not panic, because even though they weren't people locked inside, a lot of people lost their jobs, their portfolios and their actual net value was going up because the market was being propped up by the Fed. So this all manufactured this last 1 year. They printed a lot of money to prop up the market. Amazing. So, okay, it's broken that trend line. See how important that trend line was? I made a video on how important that it needed to hold the line, because this goes back since they started propping up the market in March. This has been the trend line since, and it just broke it now. That was the first day, the first candle that broke that trend line. And that's really not good. The trend is your friend until it breaks. I mean, we could have it just come back in. It could just be something going slightly over the trend line and coming back in. That's really what we want to have happen. But a lot of charts are following the same pattern. Even when we looked at Tesla, it peaked at 900 and it's coming down. Okay, so if it does come down, that 12,000 is the next major support we have. It bounced here. It bounced really strongly here. On the 4th of March, so to yesterday's trading day, it really bounced strongly on the high of 13,000, the low of 12,000. So it bounced about 500 points. The Nasdaq came back up, but it didn't close above the trend line, so it's still coming down. And we have this target here of the 12,000. It lined up in 2 ways. One, it was a very strong support line here. As you can see, it self-drew it in when you turn on your support resistance lines, as I teach you in the Stock Guru Master Course. And here it held on this support, but the main support line is really here. And we have another reason for a target to there, because we had this kind of descending wedge, I would say, with the base of the wedge being the target. And normally it usually breaks with the upside direction of the trend. But because we broke underneath this, we put the target to come down, and that matches that support line of 12,069. We could also do another thing. We could use Fibonacci and just to see a little bit of what we get. So here we put it on the bottom of the start of this kind of run, and we put it at this peak where we're sitting now. We're at the peak of the all-time high, that high. Was it the all-time high? I think it was the all-time high on the Nasdaq. So there we got a kind of Fibonacci's, and it's kind of got levels. See, it's like Fibonacci's. Google about Fibonacci. It's kind of a pattern that you see in the universe, in nature, etc. So 0 to 100%, and we had the 61% pullback would be here at 9,500. which kind of matches here if it does fully come back. And see how it also just matches almost very closely with that support line we had here, the 12,000, where it actually nearly bounced right off. See that red? See how the Fibonacci drew in this kind of 23% support line, and it kind of nearly bounced right off it. So these would be like supports if it does come down. Where we're sitting at the 12,069 close to is a very big one. It's very important that it holds there. But then we have a lot of supports also here. There was a lot of buying pressure here. So that's a main kind of trend support line also. Okay, let's clean it up and see if we can. So we have a lot of supports as we come down. But that small drop there, that was like the panic. It's actually not been pretty small. It's not so small, I would say. The drop started a few days ago. It happened from 14,000 on the Nasdaq to now sitting at 12,000. So that's pretty big. That's almost a 20% wipe off of the tech sector, the Nasdaq. 10% would be 1,400. So it's a bit more than 10%. It's from 14,000 down to 12,500. So 1,500 point, 10% drop on the whole tech sector. Here is very strong support though, and that's where I expect it. If it doesn't hold here, if they don't announce stimulus, I believe it's coming down to here, and that's a nice scenario if it holds there, because it's been following up this trend line for so long. But remember, it's all artificial. So as soon as they prop up with the stimulus, then it should be pumping it again, because that's what they've been doing this entire time, keeping it on this trend line with the stimulus. But until then, if they make an indecision in the Senate or they delay this, it doesn't come out in the next 2 days, this will be nice if we hold here. It could really fall back to this main trend line, 10,000. So we watch it. But in the grand scheme of things, buy amazing companies for the long term, because the US stock market, the tech sector always goes up. Always remember this. The entire thing always goes up. Just don't be heavily margined, as I teach you in the Stock Room Master course. Make sure you're dollar cost averaging. So you're buying every month. Then you take away this stress. If you're buying every month, you don't really care about this. These drops is nice discounts for you. So what I'm teaching is your dollar cost averaging. You're splitting up your capital and you're buying every month at good technical entry points. So then you avoid this kind of pains that a lot of people go through as it comes here at the dot-com crash. Instead of buying everything there and then losing everything, you buy like monthly here, 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 and then your price averages out and on good technical entries. The same concept here, dollar cost average. In the Stock Room Master course, I explain this to you in detail. So to me, it looks like it is trying to come down. Stochastic RSI coming down. Squeeze mob is not turning yet, and neither has MA has not crossed yet. When the MA cross happens, then we like really panic. But right now, MA cross not really happening, and they are trying to prop it up. So it's still heading up. Stochastic and RSI are turning to come down though. Squeeze mob going green. It's trying to come down to this trend line, and we really want it to hold on this one, or it comes down to the 10,000 on the 1 year time frame. So what's happening for the next few weeks? Coming down to 12,069 unless they announce a stimulus. That's hopefully where it holds. If not, then we come back to this main trend line, 10,400 area. 10,600 has some really strong supports, which is another almost 15% wipe off the market of the tech sector. So now we click down here. What's happening tomorrow? 3 months. So Friday's trading day, which is the 5th. Friday the 5th. What is happening today? It was a swift wipe off and a very swift reset of the stochastic and RSI, wasn't it? We were very peaking there, and it cleaned it off straight away. But on the 1 year, it's too volatile. It's too volatile on the hourly candles. On the daily candles, it still looks like it's trying to push down, even though they're oversold. Below the dotted lines, good buying opportunities, undervalued. Above the dotted lines, overvalued. But even though it's undersold, it's still pointing and heading down strongly. They're not just trying to turn up. They're like really down, red down. So for the next few weeks and months, it looks like it's really trying to. Stimulus is the thing that's going to. My theory is going to do this 10, 12,000 stimulus announcement, poof, climb back into this trend line. But dollar cost average monthly, because this whole thing is manufactured. So unlikely that it would fall down to this trend line, because that's when they started manufacturing it. The Fed would do it again. They'll prop it up completely again. But very likely that it could come down to here without causing too much turmoil. But a lot of people will be margin called. So as I teach you, make sure you're not using much margin. If you have a lot of margin during volatile times like this, really try to bring down your margin. as I teach, never use margin unless you've been having 5 years experience, and don't over margin. But right now I would try to even end my margin or close any margin or really reduce margin. That's what I'm going to be looking at, that if I'm going to reduce margin, for me personally, because it's just looking risky. I do believe they're going to prop it up. In the long-term side of things, it's beautiful. This is still massively trending up. The overall US stock market is just huge in the long run, but I do see it could possibly come down and correct here until the stimulus announcement. So I could just, I won't pull out, maybe. I have to look at how much I want to pull out. If I want to pull out and anticipate this correction, do I want to hold on to 20%? I'm going to wait and see these few days. If this support line holds, if they announce the stimulus on the 12,069, then I keep in my portfolio. If not, but then if I pull out now, I need to weigh this up more. It's a good question, because I do really see this correcting. After it broke that major trend line, it's very unfortunate, but that was a really important support, trend line. Okay, let's see if we can see any other place, more information. Let's take off the MA cross so we can get more picture. Let's get rid of some of these previous targets and support lines. These targets are invalidated because it broke underneath this triangle. Okay, now we have some clean charts. I just really don't like this candle breaking underneath this trend line. That was important. And this whole thing has been propped up under Trump. That was under Trump. So right now, when Biden, if they're pushing stimulus and stuff, they won't push as hard as Trump was to prop up the stock market. Trump was really propping up the stock market. So that means it could really... So that's a 20% drop. Do I want to hold on to the entire portfolio, or do I want to sell, close and then wait on the sidelines to see when the stimulus, and if it does come down to there? Because if it does come down to there, and it's a great buying opportunities. Or I can just dollar cost average down. But it does look like an important support line is here. I need to keep monitoring this and make decisions. I'm not seeing any. There was a cup and handle here, but I'm not seeing really any patterns besides this. Here we had a kind of that descending, I don't know, it's kind of a descending wedge. And it is breaking down to the downside. So that target's still in play, 12,069. Not seeing many indicators that we can use. Here's a kind of another trend line we could form. There's kind of a trend, right? So it's never 100% accurate, but what we're trying to do is we're trying to put kind of like indicators or little patterns that we can see, and technical patterns that we can see that are doing something in the market. It's very important that it holds here at 1269. That's one thing I know. We really want it to hold there. If it doesn't hold there, it's like, I don't think it comes down to here, because this is when the Fed started propping up the market in March. But there, yes, that main trend line, if it breaks this kind of, this upper one. And to me, it looks like it can, and it's got every right to. It was at 7,000 in March last year, 1 year ago, and now it's at 14,000. It went up 100%. It doubled in a year. It's normal that it would have a pullback. I will keep buying companies that I see that are on the cheap, but I'm going to be really also, I was kind of noticing this the last month. As we were talking, there was like so many companies that were overbought. Nearly everything was overbought, and everything very quickly corrected back, right? So everything was overbought here. PayPal, for example, there, look at that, and then it was overbought above the dotted lines, and now it's all the way down. It's already corrected in just a few days. It was a quick correction. Unity, also overbought, but massively coming down. It was kind of just leaking down, but now very oversold. Twitter, also very quickly correcting. They were all in the very overbought. It was hard to find really deals or companies to be buying especially in the tech sector. The only one was really Intel. Intel was okay, and that's even correcting now on the daily back. So everything's quickly getting back into the buying areas. I believe in these companies. So the way I look at the stock market and what I teach in the course in depth, in these videos, you're kind of getting a little glimpse of what you learn in the course. You really need to take it to understand the Stock Guru Master Course. You can see it in the link in the description, the pinned comment, or stockguru.us. But so what I'm seeing it like this. I'm going to be only buying Tesla cars pretty much. The fastest car in the world, the safest car, self-driving, robotic, etc. Looks like a super car made by the smartest guy in the world, engineer. So I'm only buying Tesla cars, and I think a lot of people are going to have this kind of opinion. So that's why I like Tesla, and they're a robotics company, and they have Elon Musk, the rocket guy, who's a super genius. So I really like buying this company. I believe in them for the next 5 to 10 years, like I've believed in them since 2015 when I was buying them at $8. So I'll keep buying Tesla. And Tesla's kind of looking nice right now. Everything is coming back to this. Everything is coming back to this main trend lines. Even Tesla, it was 900 is coming back to this main trend lines. Ooh, I'm going to make an in-depth video on Tesla because we kind of predicted this drop. Still got more to go. 580. That support line 567 was important. It really held on that 616 support line, huh? Nice. This support line that I had drawn in, it really held on there very strongly. It bounced off it. So good buy there. If you watched my Tesla video yesterday, it was like this point and this point is good buying opportunities. And that will finish that correction that we saw on the whole NASDAQ. And we want it to hold there. That's what I'm saying. It's really important that it comes down to that 12,000 NASDAQ and holds there. Because if not, Tesla is like potential down there, which would be amazing buy. And it can do that. It was only at that price. Most of you following this channel, in October, you were buying it at that price. So I don't know why everyone's getting... I mean, I do know why a lot of portfolio value is wiped off, but just lower margin is... If you only lose when you sell your stocks. In the long run, are people going to be buying Teslas? Yes. You have to always do your own due diligence, broker. But in my perspective, Tesla, it's amazing. I'm so lucky I'm investing in Tesla. They have self-driving cars. They're going to have a robotic fleet. They have like cars that are the most advanced cars in the world. They're driving by themselves. They have so much big data. They have super geniuses, the billions of dollars behind them, richest men in the world. It's like amazing. Bitcoin, I really like. If you've been following my videos in July, since July, $9,000 saying buy Bitcoin. And it's also Bitcoin, it's interesting, right? Look at that similarity. So that's Bitcoin's chart. And this is Tesla's chart. Let's pull them up next to each other because that was interesting. It was, how do I, there's a way once, here. So let's pull them up next to each other, Bitcoin and Tesla, because that was very interesting. Okay, that one Bitcoin, BTC. That's on the 1 hour chart, so this needs to be on the daily, on the yearly candle, sorry. Let's make them both order. Everyone seeing that? Interesting, right? Very similar patterns. They're just climbing. They're just massively climbing, both on these trend lines. I've followed Bitcoin before. We need like a different... I had trend lines already drawn in for Bitcoin, but there's just so many different... Okay, I've got it on this menu. We go to the watch list. We have it here. See? Ooh. Interesting. Oh no. I'll move that line back. Very similar trend lines, very similar patterns between Bitcoin and Tesla. Okay, let's see another company. Let's see if this pattern is like playing out in different... so that's Tesla. Let's do another big tech company that everyone's following, NIO, but they're kind of in the same sector. Let's do another sector that all the tech companies, some big tech company, Apple. That trend line, similar pattern, but that trend line isn't drawn in for Apple. So I'm going to draw it in with the ray. It's actually Apple just broke out of Apple just broke that trend line, just like we were showing on the Nasdaq. So Apple's almost following the Nasdaq. So if we go back to the Nasdaq, Apple is just very heavily following the Nasdaq. It's almost exactly. TradingView needs to clean up they've just got too many similar tickers. Because I was following the Nasdaq, we already had charts on it, but then it's got a different ticker here. So okay, maybe it's on this. No, that is the index, the composite, but I had charts already. So let's see. Okay, not showing for some reason, but very similar, and it's already broken out of that trend line. So to me, it looks like the tech sector is trying to correct. A big support would be down here. The only thing that's going to keep it up is if they release stimulus. There is also a trend line here, so let's do it fresh. That's kind of nice that this chart opened. Here is a kind of trend line, right? That happened on the 23rd of September. It's a little small mini one, but it is there. You could even do it like that. Ooh. Cleaner perspective, right? Ouch. Not as bad though, not as bad as that 10,000. And it lines up with that strong support there. If we just do it like that and just keep it really simple. There's where it's coming down to. And if it does come down, how would it play down? I think it would come down, bounce. It wouldn't just be a straight drop. It'd be something like jump, bounce, and then so that would be around end of May. No, 29th of June. Unless this just drops like, which is possible, but I think because they're going to announce stimulus, it's going to be like, and that would also make kind of like head shoulder pattern. But dollar cost average, and make sure you split up your capital. If you're over margin, pull out your margin because there is an open space. Very unlikely it comes down to here though during COVID. I don't think they'll let it drop that far. But here, 10,000, very strong support. And right here, this trend line is kind of a potential support here at the 11,600. It is definitely coming down to that 12, more than likely, unless they pass the stimulus, coming to that 12,000, which is beautiful. I'm going to make it, dollar cost average is always my recommendation, but the tech market is really selling off. Some of these companies, though, are still amazing deals. So, for example, Unity. I want to own Unity for the long term. I really like that company. Palantir was also, I bought a lot of Palantir the last week. Palantir was on this strong support and it did bounce off there. And it looks like it is turning to head up. Stochastic, RSI, volume coming in. It's on this strong support. It bounced off there. That was a nice buy. I do like Palantir. Oh, when I'm in these kind of charts, I can't use the... It takes away my... okay, now it comes back. So when you have those charts, it takes away the patterns that I drew. So that's Palantir. Held on that support and turned up. Did the MA cross? No, it's still open. But it's really bottoming out and a lot of volume coming in. But the whole tech sector does look like it is selling off. The only thing that's going to prop it up is... But Google, no. Google and Facebook, they held their own. Money actually moved into them. Those are my targets for Google, which it's playing out. But it really held there. But it just went, the squeeze mob went red for the first time in a long time, since before 2021. Stochastic RSI bottoming down and turning, but for Google, but volume coming in. So it could start to head up here, but Google is a long-term nice hold. But the entire tech sector does seem like it is selling off. We want it to really hold that 12,000 support. If not, then we are coming to that trend line that we drew on that other one. We had it here also. It was here, 11,600. But we have a very strong support here at the 12,000. So expect a bounce. It's too strong of a support just to break through. Even if it does come there, it is going to bounce very strongly on there, possibly like that, because look how much support was here as it climbed up the Nasdaq. But overall, this thing is correcting. It broke out of this major trend line, and the MA cross did occur. And this was the MA cross before in November. That was and then here it just crossed now to open to head down, and then it break this support. So it is coming down. If they don't release stimulus here in the next few days, that's where we would expect to bounce. If not, if they don't release stimulus and it's a brutal kind of announcement, then we could come back down to this main trend line. So I hope you like this analysis. I will keep monitoring it. It is playing out like we saw yesterday. It is trying to come down to this 1269. Hit the subscribe button on your phone, the bell, the thumbs up button, all those buttons there, so you're notified of these daily trades, these daily videos. And I'm also going to show you the chat room. So this is the chat room. To join, you go to chat.stockguru.us on your phone, on your computer, and it's a Slack members chat room. It's $49 a month. And here is people, this is the last 24 hours of chats. Jonas is 40, 40, 20 in Bitcoin, Ethereum, Doge, very little in Mana. They're sharing worst case scenarios, depends on these three ingredients. Johnny talking about 3 great indicators to watch out for. The 10-year treasury yield. Watch the 10-year treasury yield. $1.50 is a heavy top. But if it breaks from there, pay note. The US dollar, I think 40K is a bit bullish for Ethereum. They're talking about targets. You just have to slowly DCA back up. You're going to get in at some great entries as you rebuild. Johnny was down to his last dollars, and now he's asking some advice, and Jonas is telling him that the dollar cost average, keep your head up, hold on. You just have to slowly DCA. You're getting to get in at some great entry points as you rebuild. Let's see what happens tomorrow. Whether it is I'm here for it. Did you diversify your portfolio after what happened with AMC? Right now, crypto and recovery stocks are keeping my losses at a minimum. Best to get out of speculative positions for now and securing long-term growth. I agree. It is also a help for me. I'm not so experienced, but this group is helping me to understand what's happening, stay calm in these bloody days. This is Johnny sharing tech, the head and shoulders that we saw. Oh, they're pointing also a Nasdaq and falling down to the net, to this 10K. The 12,000 support is very important. Me talking about how I'm reading most of their messages. Jonas, thank you for hosting, James. This group has been such a big help. I've been really in dark place after losing my business relation problems too. The people here, the energy, it's such an amazing, tremendous help. I'm incredibly grateful. Also for Jonas, it's amazing. Pan, actually, guys, Pan predicted this whole market drop very well. So Pan is a multimillionaire in here. He's a very, very intelligent person. And he kind of wrote an essay about 1 week ago. So this is the chats that we have in here. To join us again, you go to this website, chat.stockguru.us. It's $49 a month, and there's 170 people in here, 16 millionaires that we know of, and 6 multimillionaires. And we're investing and trading and talking during market hours, sharing information. I want to show you Pan's message, because he did warn people. Here, this was, what date was this? This was on the 11th of February, so almost a month ago. Pan, he talked about this a lot in the chat room. Inverse leverage ETFs aren't a good way to hedge. Look into how they work. Long story short, they go up less consistently and the market goes down. If you want to hedge against the coming crash, better to buy puts with way out expirations on the stocks you'd expect to drop the most overvalued stocks. I've been buying puts expiring January 2020 and 2023 for Tesla, Plug, Riot, Netflix, Zoom over the last few weeks. All the ones that rocket up in the last year, it's the same ones that will crash hardest if the market does. And he's correct on that play. Also, rebalance your portfolio, sell the companies at record highs that don't actually make money, and buy stuff that has low PE ratio, is big and profitable. It was great advice by Pan. And then he talked about this more. He actually wrote an essay about the upcoming crash. There is some way to search for it, but there's quite a lot of chats. So, okay, I hope you like this. Make sure you join us on this chat room. I would love to show you his essay, because he really did predict it perfectly. But I believe it's going to be just a slight correction down to this 12,000, this $10,000 cost average strategy, and it's kind of a beautiful thing. You're buying your companies that you believe in for the next 10, 15 years. This is James from Stock Guru. I hope you liked this little kind of journey that we went on, the Nasdaq does look like it is going to hit that target first, and then we have to monitor what happens next. This is James from Stockguru. Have a beautiful trading, beautiful sleep, beautiful rest, and I'll see you again tomorrow.